What's going on, guys? Chris Okada here. 36th and Broadway is the name of the show. My name is Chris Okada, your hostess of the mostest, CEO of Okada & Company in Midtown Manhattan. We are broadcasting, not live, but we are broadcasting from the middle of Herald Square, Midtown Manhattan, Empire State Building, Miracle on 34th Street, and we are here to bring to you the knowledge of how to crush it in commercial real estate investing in general, entrepreneurship, business development, a little bit of cryptocurrencies, because we've all tasted the sweetness of possibilities of 10,000% ROI. And again, this is Chris Okada, and this is the first episode. Thank you so much. Here we go. Today's show is brought to you by 261 East 78th Street. We have a 2,800 square foot vacant office space in the Upper East Side. It is perfect for our medical use. So brokers, tenants out there that is looking to capture the Upper East Side market and need office space, 2,800 square feet on the third floor. Gorgeous space, glass offices. We're asking $80 a foot, which is obviously negotiable. We are looking for quality first. But, that's pretty much it. 2,800 square feet, 261 East 78th Street. You can check it out on our website, or you could go on CoStar. You can go on LoopNet. Hit my Instagram. We will be putting this up. But first and foremost, thank you guys so much again for tuning in. And for those of you listening on the podcast, thank you so much for listening to the 36th and Broadway audio podcast. Okay, so the first question today, this is how we're going to basically do it. This is sort of a topical show where every week we will have a topic, and the topics will be chosen by you out there, people in the world of real estate, commercial real estate, investing. And today, a good friend of ours, a good friend of mine, April, she pretty much is starting up her own realty company and own investment company, and had several questions. But these questions are not questions that are basically hers on her own. A lot of people reach out to me with these questions. So number one, how did you start investing, and how did you start your brokerage firm? Okay, two very different things, but first things first, how did I start my brokerage firm? I started my brokerage firm because I did not want to work for a large corporation, and my father had his own brokerage firm at the time and came to me. I was 25 years old, and he came to me and said, Chris, I want to semi-retire. I want to retire. But at that time, we had a big office on Madison Avenue and 52nd Street. We basically had half a floor of a full office building, full staff, full brokerage. And I basically, at 25 years old, I didn't feel comfortable taking on such basically overhead. The rent was huge. The staff was fairly large. And all that stuff. But basically put, I wanted to venture out on my own. So I started in a small loft office space on 36th Street, right off of Broadway. And basically I think there was a cockroach. It was a pure, there was definitely like a cockroach when I went in for the first time. It was great. but it was a dead cockroach. And, I had to ignore it and pretty much just pay attention to the fact that the rent was like $2,500, and that's all I could afford. And I walked into the landlord's office and said I wanted it, and basically he said, sure. That's how it all started. And, I'll get more into the details at a different time, but for the most part, that's how it started. It was very unromantic. I had 6 months of startup costs and running costs. I had to buy furniture, had to buy a computer, a desk, a chair, and a printer, and security deposit, and 6 months of rent. I had 6 months to live. And that was probably the best thing I could have done for myself, which was put a gun to my head. Make it all or lose it all. It was all on the line. I was 25 years old. I didn't know what the hell I was doing. But I knew I wanted to have my own company. And I knew I didn't want to work for the man. How did I start investing? Now, this is a very broad question. I'm assuming I started investing in stocks at very, very early. I was in college, and, we had Scottrade, or we had all these other little, pretty much I've been with Scottrade for a very, very long time. And I think it was something like $500 or something. Pretty much what every young cryptocurrency kid, starts off with. Let me buy, 10 ripples, and that sort of thing. $100 worth, $200 worth. That's really where I started my investing. It was not romantic. It was, at that time, $7 a trade was their big, splash. It's only $7 a trade, so that's all I could afford. And that's how I started investing. How I started investing in real estate was in 2011. The world fell apart. I did very well in 2009 and 2010. Everyone was like screaming and crying and yelling and jumping and fighting, and I didn't have any risk, at that point, and was really just, my MO is I find good deals. I find good real estate deals. That's it. People come to me. They call me, Chris, we're in the market. We hear you have good deals, whether it's office space or whether it's an investment property. That's why people come to me. And long story short, I was tired of my clients making millions and tens of millions. One client made $250 million 12 months after I sold him a property, and I paid a bunch of taxes, a bunch of co-brokers. When you make money, people come out the woodwork like, hey, remember that time I lent you my comb? That sort of thing. And I had a lot of that. And then, not family. I'm lucky my family didn't do that. But people come out of the woodwork. They're like, hey, I heard you doing well. Can I borrow $500? And, I'll pay you back. And the answer is pretty much you're never going to pay me back unless I stalk you. So, I started investing shortly in 2011. I had invested as a limited partner, meaning it was not my deal. I wasn't running it. I didn't find it. it was a good deal, and I invested as a limited partner in a chain of supermarkets called Stop and Shop in Connecticut, mostly in Glastonbury, Connecticut, and throughout Connecticut, and a little bit in Vermont. And I've never even visited it, but the returns were so great. It was a 10 capitalization rate. I'd never seen a 10 cap before. So I said, screw it. Let's do it. Okay. How much time was this? How has it been so far? Can you see? 5 minutes? 9 minutes. All right, guys. The thing about everything that I'm trying to do with 36th and Broadway is I'm sensitive. We all have ADD. We all want to keep it going with that sort of thing with our lives. So I will try to keep it brief. So how did I start investing? How can I? So the advice that I have for April is if you want to start investing, don't do the deal with real estate. Don't do your first real estate all on your own. Don't be a hero. Don't go to Harlem and try to find a shell and you've never renovated a closet, let alone an entire townhouse or something. Don't take on a project that's very large. If anything, I would try to invest alongside someone that has done this several times before, that you trust, have a lawyer, pretty much ready to go with partnership agreements. You have to get comfortable with this person. And that's scary because, you have to let go of some control. However, at the same time, better them than you asking your mother and your uncle and your sister and your friends and your high school buddies for money to invest, and it's your first venture. That is not what you want to do. You want to have been worked alongside someone, have invested alongside someone's project, and really take that investment approach. And that it could be your first investment. It doesn't have to be hundreds of thousands of dollars. It could be a small investment, with a group of people, investing with someone that you trust. And really that's it. And that is how I feel that most young or new investors should do it. They should work on a team. If they have no money, then work on a team as an assistant in that investment project. If you have a little bit of money or if you have a full-time job, I would invest as a limited partner with someone that you trust. Again, trust. I keep on using the word trust because it's super important. Trust is everything. You got to trust that they have a good eye for finding a good deal. You got to trust that when things get wrong, they're not going to fly, to Mexico and disappear. That you trust that they know what they're doing, and then trust that, when it comes to numbers, that you get paid, and that sort of thing. So that's how I think rookie people should start investing in real estate and commercial real estate. Do you flip or hold for cash now? I think it's deal by deal. For me, the old adage is people want to flip and flip and flip and that sort of thing until you continue to grow, until you have $100 million, and then you cash in your chips and look for a stable property. For me, I think it's extremely hard. We invest here in New York City in Midtown Manhattan. It's really hard to find a deal that's good, to buy it, and to run the business plan. So ideally, all the big landlords, all the wealthy landlords that I know of, that are in their 50s or 60s or even in their 40s, a lot of them held on and bought in the 80s and in the 90s and held on for 30, for 20 years, and through appreciation, through smart business, through growth, through changes of neighborhoods. That's how they accumulated real wealth, and they never, ever sold a property. That sort of philosophy may not be for everyone because, you invested X dollars, you made 3X dollars, and now you want to cash in your chips, and that sort of thing. It's, a lot of businesses do very well by doing that, when you cash in your chips. But I just don't like to pay taxes, capital gains, man. They'll get you. So for us, it's, not that of course I pay taxes, everyone out there, but real estate, the benefit of real estate are the tax sort of shelters, the depreciation, the paper losses, and then the 1031 exchange. Those are all created so that you can preserve wealth in real estate. Did you know real estate is the oldest industry of humankind? Think back to the caveman era. I'm the guy that maybe is, the head of the camp or whatever, But someone is sent off into the wilderness to find a warm cave that's safe. That's what we do, So if you think about it, that's real estate. We find cozy caves that won't, that'll protect us. And then, thousands and thousands and millions of years, we've evolved to luxury, skyscraping, beautiful views with, ivory and marble and steel and glass and all of the good stuff. That's us today. So going back to the original, sorry for that little rant, but I hold, man. I holds, baby. You got to hold, man. I want to keep this portfolio growing. We acquired 5 properties. We did sell out one condominium project. It was successful. 432 West 52nd Street. We paid $42 million for 55 brand new apartments in Midtown West on 52nd Street between 9th and 10th Avenue. And we successfully sold out. We took profits. And we paid Uncle Sam. That's what happened with condominium projects. And yes, you can obviously use those, profits and blah, 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 pay it forward and do all kinds of things. But that beautiful 100 by 100 foot, 7-story brand new property with 55 gorgeous apartments, gone forever. So I don't know. I love residential. I love cash flowing assets. I believe in the possibility of selling, but it's really hard to find good deals in Midtown Manhattan. I'd rather hold it and continue with my portfolio. Next question, how big is my portfolio? My portfolio is, because we sold out 432 West 52nd Street, we have 5 projects. Now we are down to 4. However, I do not include the Stop and Shop chain as it's part of my portfolio. I should. I consider portfolio like something that costs millions of dollars and we put together and it's really difficult. And that sort of thing. So our portfolio is probably up to about 250,000 square feet over several properties. You know what? I have to in 2018, it is today, February. What's today's date? Today is February 8th, 2018. Let me reassess the square footage of my portfolio. I will not include the Connecticut. I will not include an apartment that I bought in Queens. Let me think back. Thinking back to your first 3 or 4 deals, how did you go about funding them? My first 3 or 4 deals were so good, I funded half. My first deal, I was a limited partner. The second deal was 45 West 34th Street. It went about because I brought it to a landlord in the neighborhood, Ira Fishman, and the Garral family, huge families here in New York City. And basically, they wanted it. And I said, well, I'm putting this deal together. And they said, we'll just give you equity. And that's really how it is. And they took the ball. They took the ball and ran with it. And it's a gorgeous 113,000 square foot office building across the Empire State Building. Best known for the Levi's and Steve Madden on the ground floor next to Victoria's Secret. We have the office portion upstairs. How do we go about funding the other deals? Bottom line, raise money. If I had a can, I wish I had a can on me. I would go around raising money. That's how everything is done. You go around, you speak to wealthy people or not so wealthy people, and you tell them about a great property you're about to acquire. But my third property, on all the other ones, I'm like a 55% owner. I put my monies where my mouth is. All right, guys? Put the money where my mouth is. There's a property on 24th Street between 6th and 7th Avenue. Love it. It's a retail property. The tenant is Barcade. They have a bar and arcade. They took the two words, bar and arcade, and they made it Barcade. Go check them out, 148 West 24th Street. Yeah, I'm over a 50% owner in that deal, and the rest came from people in the industry, in the commercial real estate industry. And should I hire people? Should I hire people to cold call on a commission base? Now, I am assuming you're talking about. I don't know what you're talking about. You are probably talking about brokerage. The answer is yes. However, if you can't pick up the phone and make 200 calls a day, this is for everyone out there. If you can't pick up the phone and make 200 calls a day, I don't care how busy you are. If you can't make 50 awesome calls or, 50 quality calls or 200 not quality calls every single day, how will you lead other people to make 50 to 200 calls every single day? You have to lead by example, and you have to drink the Kool-Aid that you make. So I guess that's pretty much it. I hope, this is the first piece. Basically, how do you get into your first deals? I would be a limited partner with people you trust. If you don't know anyone, look for them. Be in that arena, whatever market you're in. I hold my investments for long-term cash flow because that's what my mentors that are billionaires have told me. And I believe them over the hotshot young millionaire because I don't know where they'll be when they're 60, 65. And how did I start my brokerage? By putting a gun to my head. And that, fellas, men and women, ladies and gentlemen, is the first episode of 36th and Broadway. I don't even know if this helped, but I hope it did. Please do me a favor, follow on Instagram at Chris Okada, on YouTube at Christopher Okada, on Facebook, Christopher Okada. Everywhere, it's at Chris Okada. Thank you so much. This is 36th and Broadway. I'll talk to you guys later. Out.